Let's bring in our guest analyst. Let's bring in Mr. Craig Bolanos. He's a co-founder and wealth partner at VestGen Wealth Advisors in Chicago. Thanks for being on the show, Craig. No big indicators today. What are you going to be looking at? What do you think you're going to be talking to most of your clients about today?
Well, you're right. No big indicators, but I'm excited for next week. We get CPI, we get PPI, we get all the I's. It's going to be good data next week. But the reality is we're continuing to focus on the three phases of this market. And I think we're still in the rising phase. You know, we've talked before that many a times I thought the fair value on the market coming in would be 7,300 to 7,350. We're trading above that. Aspirationally, maybe we get as high as 7,700, but I am planning for what I call a buy the dip mentality in the fall, because those midterm elections, even though they don't have anything to do with earnings or the economy, they do historically give people an excuse to put some selling pressure on the broader S&P.
Yeah, I mean, we're going to have our hiccups. I think one of the bigger ones everybody's going to be looking at is going to be the midterms coming in November. So we'll have some market volatility around that. And we'll see about what happens with this oil price in Iran. I think we're going to land this plane. I think things look very, very good going forward. But we're just going to have this short-term volatility with these oil prices. Now, you're right. We're all going to be looking at these inflation numbers. I don't know how much of that inflation, how much that oil price coming off is going to be represented in those CPI and the PPI. What do you think?
Not really. I mean, listen, at the beginning of June, I mean, oil was still $96 a barrel, right? I mean, nowhere near the $112 peak, but nowhere near the $67 pre-war. It wasn't until coming into the 4th of July that we really got into the lower 70s. So I don't have a hope that we're going to see a broad reflection of that oil price reduction. We all know that it rises like a bottle rocket, but it falls like a feather. And I think that's what frustrates many consumers. But for those of us who track the spot price, it's just more business as usual.
Yeah, and you know, the other thing I want your, you follow the markets. You've got a great head on your shoulders. Bank of America calling for 3 interest rate hikes, but the last 3 meetings this year. What are your thoughts there?
No, it's not.
All right, thank you.
Going to do that to us. I'm sorry for the drama. No, it's not going to happen. I don't think we're going to have 3 rate hikes. I'll tell you this. While people give lip service to it, and I see, what's been priced in to some of the Fed futures, I just don't think that's the reality where we're at. I mean, look at the changes that Warsh has already instituted. Look at who's he's appointed into some of the new committees. That information came out this week. I mean, it is a Fed that is changing because they recognize not the pickle that they're in, they recognize the changing economy that they're in, and they need to modernize the Fed if they're going to remain data dependent. But I don't think we're going to be staring at 3 rates. Because what about the other side of the dual mandate, maximizing employment? You go ahead and provide 3 rate hikes. Let's all acknowledge how that's going to go. It's going to go off the proverbial cliff.
Yeah, I mean, that's what I want to ask him. I mean, how does anybody think that raising rates is going to help the price of oil? How does raising rates going to help anybody get a job? What is raising rates really going to do? I mean, and arguably, I had a guy on the show probably 2 or 3 days ago, Craig, that said he could make a great reason to cut rates because of some of the things we're going through. Because the people on the lower part of that K-shaped economy, 70% of America, they're really kind of struggling right now. And by the way, we've had positive CPI numbers for a long time. We haven't had a negative one in a while. And as long as that's the case, that means prices are still going up. They haven't really come down. They may be going up at a slower pace, or they just picked up a little bit over this oil issue, but they're still going up, right? And so people on Main Street really haven't gotten any relief, have they?
No, they haven't gotten any relief. And you know what? High frequency data, like filling up your gas tank every single week, going to the food store 2 to 3 times a week, that's a better measure of the real inflation in America than anything that comes across your Bloomberg terminal or the ticker tape. So I'm very, very empathetic to that. And I think people get that in reality. But I'm happy the Bank of America said what they said. We need to have counterpoints, I guess. That's what makes a market. But it just wouldn't seem responsible.
Right.
In the same way, Scott, it wouldn't be responsible to cut rates prematurely. Seriously. I mean, what if oil did spike back to those highs of 112 on the back of rate cuts? It wouldn't be because of the rate cuts. It would be because of forces in Iran. No, that would be bad as well. So I think the Fed is very data dependent, measured, independent still, and I like all 3 of those.
And you're in the business of looking after people's education, their retirement, and health money, right? I mean, the three big ones I take a look at, and you probably would admit though that a majority of your customers or your clients, I don't know what you really call them, but they would probably benefit from a little bit of a rate hike, wouldn't they?
I would tell you that a majority of our clients would celebrate the higher net interest margin. It takes away some of the reinvestment rate risk on bond yields. It's going to give better
Right.
people net interest
Yes.
margin on their treasuries and their high yield money markets. But the reality is they all get it too. They know that an escalating rate, while it benefits the safe money side of the ledger, it's going to take part of the multiple off of equities. And nobody wants to see any destruction of the wealth effect. And the US economy shouldn't want that either. I know the spending is incredibly uneven, but the fact is the spending is still here, which is why America is so
Right.
resilient. I just understand the spendings from the top. So I think the clients at VestGen Wealth Partners are very centered in their finances and centered in how it works around the world.
All right, one last thing before you go. I wanted to get your opinion on this too, because you've always got a decent take on things. We've seen, say, Samsung was a great story this week. It got punished for great results. We've seen Nvidia basically punished every time that they report since, so I don't know, October. It's almost like it's too good to be true. The market's afraid of themselves. Their imagination is their own worst enemy. When do we come out of that fog?
You know what? I think it's going to be a while, but if people are looking to make sure they're building their shopping list for buy the dip sometime when it comes through this fall, Mag 7, crypto, semis, enough said.
Yeah, I mean, I'm just as bullish as you are on the future here. I think that, and there's also some other a little esoteric, maybe touchy-feely things I think are great. I mean, if you look at the big picture, Craig, real quick, I would say that the president is trying to rewrite what's happening in the Middle East and trying to make that a safe place, or at least a calmer place, which would be a massive, massive win. Our economy probably is doing the best out of any other economy in the world right now. He's had just a real successful World Cup here in this country. What happened over the 4th of July and the Freedom 250 with the UFC on the lawn of the White House. I mean, one big great thing after another to make you feel good about the country and feel good about where we're going with this economy. I think he's done an absolute incredible job. We'll see how he gets rewarded or punished when it comes to the midterms. But I do think that there's a lot of things to celebrate in this country, and we shouldn't stop just because the 4th of July is over. I'll give you the last 20 seconds.
No, listen, America 250 was fantastic. The U.S. men's national team had a great run, although they bombed out precipitously. We need to fix soccer from the ground up at the club level. Don't get me started on those things.
Right.
But yes, no, America is great. The exceptionalism is still here, and everybody should lean into the ingenuity, the free markets, the system, and the check and balances that we have, because that's why we remain the world's bank and we attract all of the capital. It is a great place to be.
The World's Bank. I like that. All right, brother. Thanks for coming on the show. Really appreciate starting a Friday off with a. We didn't have any good economic indicators. Usually you're on for a bomb, but nothing today. So we had to actually talk and get to know each other. Appreciate that, Craig. Craig Bolanos coming to us from Chicago. He's a co-founder and wealth partner at VestGen Wealth Advisors up there. All right.